I'm trying to do a couple things. I don't know if this is working. I'll just focus on the live room. There's only 5 of you in here. Dollar CAD and dollar Swissy. All right. All right. Treasuries are catching a bid. All right, we gotta pay attention. Craig, you're doing Aussie pairs too. Nice. Pretty bearish. I mean, that's a pretty global macro. Wow, I just got lifted at 14. I had an offer, and I talked about that in the live room. Treasuries are ripping. Oil's off barely. I don't know if I need these headphones. See what this storytelling is. Come on. Cut by losing patience? That was a terrible headline. What does that even mean? All right, equities catching a bid. Nice, gold's up.
Rates, but they come close. 8 members of the 17-member Open Market Committee saw the need for rate cuts this year. One, Jim Bowen of St. Louis, voted to cut today. A majority of the committee sees 2 rate cuts, 50 basis points, as appropriate by the end of next year. Uncertainties about the outlook have
2, huh? I think the market wanted 4. 4. That's just insane. May resell some 5s.
Target until 2021. That pulls down the long-run neutral rate to 2.5%, where we are now. But even with rate cuts, it won't get back there until 2022 or later. Positives in the outlook, they see unemployment at 3.6% this year, a tenth lower than they forecast in March. Household spending appears to have picked up, but business investment...
I'm going to re-short a couple 5s that we covered down at 19 plus.
Thank you so much. We're looking at the 10-year yield go down. It's come right back to where it was before. Equity index is moving higher, so we now have a gain in stock, whereas before we were pretty much little change. And in terms of looking at the dollar, I'm just going to pull up the Bloomberg Dollar Index, and right now it is at session lows, off by 0.3%. Let's bring in Michael Gapin, Barclays chief U.S. economist from their offices in New York.
It seems like these calls we bought should be up more. There we go.
Fixed income senior portfolio manager. Michael, let me turn to you first because you've been forecasting or predicting a 50
now they're going to ramp treasuries now.
How does what you just heard from Michael McKee push us in that direction?
Well, I think this is about as close as they could come to cutting today. In fact, if 8 of the members are forecasting it, at least by year end,
Wow, gold's ripping. I may short some euro here. Dollar Swiss is getting wrecked.
Let's bring in Michael Gapin, Barclays chief U.S. economist from their offices in New York, and of course, still with us on set is Jeff Rosenberg,
Cover a little bit of dollar yen.
senior portfolio manager. Let me turn to you first because you've been forecasting or predicting.
Yeah, I'm gonna short euro dollar here, guys. Cash market first, and then maybe sell some futures.
I think this is about as close as they could come to cutting today. In fact, if 8 of the members are forecasting it, at least by year end, I think it's walking it right up to the point, and the markets will now expect action in July. Yes, the outcome of the G20 meeting matters, and it was just our view that a combination of incoming data, increased uncertainty,
I'm gonna sell futures too. Just one lot. I think I'm gonna take a
expectation that the outcome of today and maybe some ongoing tensions after the G20 is going to lead markets to maybe price in more than one cut at the July meeting. And the Fed that tends to surprise, that's where I get to the 50 basis points. But more importantly, we're looking for a series of cuts over the remainder of the year to elongate the expansion, and that's what we're getting. Jeff Rosenberg, that's one of the things I see here is it's a sequential Fed. They use the word from Greenspan. It's more than one cut at the July meeting. And the Fed that tends to surprise, that's where I get to the 50 basis points. But more importantly, we're looking for a series of cuts over the remainder of the year to elongate the expansion, and that's what we're getting. Jeff Rosenberg, that's one of the things I see here is it's a sequential Fed. They use the word from Greenspan. It's a measured Fed. This is a no-drama Fed.
I'm gonna take half these calls off we bought this morning.
And above market expectations. There's a lot of market expectations in here.
I can come out of them.
Michael, we had you in the office earlier today. I asked you this question, but I'll ask you again. A lot of the forecasts, and you're out there with 50 basis points in terms of July. But talk to us a little bit about how conditional that forecast is on next week, the G20 trade. What happens if we get a good outcome, market financial conditions, react positively? What does that do to your Fed forecast? I'd suggest maybe you don't. So obviously it depends on what that message would be out of the G20, but you might not get 75, and maybe you push it back from July. But I think that there's what I wanted to emphasize in our notes to clients was that it wasn't just about trade, that we were seeing weakness in other data and more evidence that inflation is running below 2%, which makes me feel that policy is just too tight. So even if you get a decent outcome on the G20, I still think there's plenty of space for
Question is if they're gonna lift this market all the way back to the highs from yesterday. Trying to sell out of these tens calls.
Michael McKee, who's still over at the Fed, you mentioned that inflation and how the Fed doesn't see inflation picking up even with the expected rate cuts.
Craig, what are you doing in here? Does anybody else care? Brett, Rio? You guys just watching or what?
forecast really doesn't change. 2.1% this year, 2% next year, which is a tenth higher than they had forecast, probably because they see rate cuts stimulating the economy. But the inflation forecast significantly marked down from 1.8% to 1.5% this year. They don't see inflation at all this year. 1.9% next year.
Of course there's no inflation.
Pretty much with core inflation, which also raises a question of whether they actually think rate cuts are going to bring inflation up.
I'm just getting lifted with those tens. Damn. came out of futures because I couldn't get lifted in my calls. I was just gonna stay long the calls. Futures are more liquid. 10s and gold, same trade. I don't know what I want to do there. Man. It's going to make a new high. No, dollar Swissy's getting smoked. Ooh, 10s. 10s and gold. Love this shit. The two best ideas we've had. Euro yen could care less. Yen's probably strong. Yen, gold, treasuries, well bid. Rio, you're selling euros, okay. Craig back on the short side, right? Love you, dollar Swissy. I feel like I need to do more here. It's just uneventful. These fives are really ripping. I'm short there. What did I sell? 25s or 31? Screw it. I'm gonna sell 2 more. Trade that around. So the 31s I sold, I'll bid. Down here, 27 and a quarter. Nice cover at 19 plus. What's the long end doing? It's definitely the front end that cares the most. Front end, the belly. You get sales on the euro there. If we get one more push down on the euro, I guess I'll take a little bit. Probably unlikely. Nice failure at pie. I haven't done anything in equities. just where they were yesterday. I guess they're not as sanguine about all this stuff. I think I may take on the yen up here. This has been pretty good resistance. Who's on YouTube? I still have the option strategies headline. Euro yen isn't doing shit. Yen looks good. Gold's good. All that stuff that we like is bid. Russell's barely budging relative to everything else. Same thing with oil. What do you got to tell me you're long though, right? Crypto? Better be long. I've just been booking. I just booked tens. I was trying to get lifted on some calls, and the spreads are kind of wide, so I just punched out of some futures. But I was buying calls down here this morning, 27.0 when futures were 27.08. Bought 8 pluses. Sold 16 plus. Sold 14s and 19s. I guess that averaged me out at 16 plus. Is that what they did? That's kind of cool. It's the average for the candle, 16 plus. I didn't know that. Yeah, man, book gains. Treasuries have been saying it all week. TLT doesn't really do much for you, huh? You got to get trading futures. You get a little bit of a pop, I guess. You don't have to deal with the open and everything else. 132.5. All right, cool. I like it. We'll see how we close. Maybe we'll push a new high. The front end is definitely bid. Gold's coming off right now. Actually, I'm gonna buy futures. 1354. See if I can get. Oh, I might have missed. Buy this dip. All right, I got long some futures there on that pullback in gold market. Whoa. Okay, Chris. Oh, you're on the YouTube? I try to do Facebook Live. I don't know what I'm doing on that. I guess I need a Libra. Need Libra to live stream. Where am I? I guess the VIX is the one that's not really cooperating. Wow, down below 15. The VIX loves the Fed backstop. Oh, futures rolled. Front month. Sure did. The stock's going to take off now. I don't. I'm not getting any juice out of my UVXY anymore either. UVXY short. All these fives are taking off. I may have to buy more tens if fives keep ripping. It's really just the VIX that's not doing much for me. Brett, you're covering cable? You're like not stopping out, are you? I like it right here at Pi. I might short a little bit more. I'm gonna cover some of this euro back. Sold pretty well. 32. I don't know, it might be 20 pips there. Euro pounds coming our way. Dragon hasn't budged. Cable. Stretching everybody. I might sell a little bit more cable. Let's see if I can get the 5 minute back up. See if we can get one more push back up on the 5 minute. Because I got a bigger short on euro versus the pound, so I mean this is a bounce to potentially a lower high. We talked about yesterday that sterling is due for a bounce. This daily cycle, I don't know, it might go all the way back to 129. TMS pivot is right in the middle of the bands. You've got 127.50. Then you've got the breakdown level and the bands all kind of around 128.50. That probably makes more sense. Another 100 pips on the up, maybe. That should bring euro pound in for us. We covered some this morning at Pi. I'm still short. Just gonna let this. This is a pretty good break. So we had the bearish engulfing, topping tail in the weekly, took out the lows. Finally got below the 8. Let's see if we can get back to pi. That'd be nice. Brett, are you long, Sterling? I'm not following you. You're long, right? You're long up at 1 hour? Covered pound long. Covered cable, you're long. Up at the 1 hour. Long or short? And the edge is to be coming out of longs. Probably feeding into a short if you're playing the intermediate term. Right? It's pretty overbought up here. And I guess you could play this. I guess you could play this pullback if you're playing day trade. Dragon's coming off. Yeah, Euro Yen's coming back down. Yen's rallying. Dollar yen coming off. What did I buy? 54? Yeah. I bought 52s or so. I'd be coming out a little bit of gold. Day trade, 4 points is pretty good. Wow. Treasuries are so well bid here. Just going to keep these calls on. Fives are going to freaking make new highs. A lot of resistance at this 118 level. Powell doing the presser now. Dave, are you on, buddy? There's Dave. Oh. Oh, here goes gold. Party Crypto, what's up, man? You're not in the live room? Oh, Powell's on in 1 minute. Oh, shit, I was going to take gold right there. Oh, they had nice music on this live. This Powell, this Fed live stuff. Uh-oh, here it comes. Whoops. You guys think we make a new high in gold and treasuries? I'm going to offer just in front of 58.
And stable prices for the FOMC meeting that concluded today. We maintained our
pals
policy
on the
interest
tape.
rate, but made some significant changes to
Poopy
our
pants.
statement. Since the beginning of the year, we have judged that our current policy stance was broadly appropriate and that we should be patient in assessing the need for any changes. In light of increased uncertainties and muted inflation pressures, we now emphasize that the committee will closely monitor the implications of incoming information for the economic outlook and will act as appropriate to sustain the expansion with a strong labor market and inflation near its 2% objective. I'd like to take a step back and review how the changing economic and financial picture brings us to today's decision. So far this year, the economy has performed reasonably well, with solid fundamentals supporting continued growth and strong employment.
Solid fundamentals.
Inflation has been running somewhat below our objective, but we've expected it to pick up, supported by solid growth and a strong job market. Along with this favorable picture, we've been mindful of some ongoing cross-currents, including trade developments and concerns about global growth. At the time of our last FOMC meeting, which ended on
that was a
May
little
1,
bit more
there was
honest.
tentative
Okay,
evidence
I got
that these
lifted up there at
cross-currents were
57.
moderating. The latest data from China and Europe were encouraging, and there were reports of progress in trade negotiations with China. Our continued patient stance seemed appropriate, and the committee saw no strong case for adjusting our policy rate. In the weeks since our last meeting, the cross-currents have reemerged. Growth indicators from around the world have disappointed on net, raising concerns about the strength of the global economy. Apparent progress on trade turned to greater uncertainty.
Hey, man. What's up? Jumped out of that YouTube stream. I'm not very good over there. My music is blasting? No way. I don't have music on. Party Crypto's music? I don't know. No music on.
And in light of recent developments, this bears watching. Still, many labor market indicators remain strong. Community, business, and labor leaders all tell us that the prospects for job seekers have seldom been better, and that this is true even for those who have traditionally struggled to find work. Wages are rising, and this is particularly so for lower-paying jobs. Committee participants' growth projections from 2019 are little revised from March, with a central tendency of 2 to 2.2%, just above their estimates of longer-run normal growth. The growth projections for the year as a whole mask some important details about the composition of growth. Annual growth will be boosted by the surprisingly strong first quarter, which had just been reported at the time of the May FOMC meeting. As I noted then, the unexpected strength was largely in net exports and inventories, components that are not generally reliable indicators of ongoing momentum.
YouTube stream.
The more reliable drivers of growth in the economy are spending on consumption and business investment. While consumption was weak in the first quarter, incoming data show that it has bounced back and is now running at a solid pace. In contrast, the limited evidence available at this time suggests that growth in business fixed income has slowed in the second quarter. Moreover, manufacturing production has posted declines so far this year.
I want to try to come out of some more of these
Thus, while the baseline outlook remains favorable, many FOMC participants cited the investment picture and weaker business sentiment, and the cross currents I mentioned earlier, as supporting their judgment that the risk of less favorable outcomes has risen. After running close to our symmetric 2% objective for most of last year, inflation declined in the first quarter. Data since then shows some pickup. Participants broadly see inflation moving back up toward our objective, but at a slower pace than had been expected. The central tendency for 2019 core inflation, which omits volatile food and energy components, is between 1.7 and 1.8%. Setting aside short-term fluctuations, committee participants expressed concerns that the pace of inflation returned to 2%. Wages are rising, as noted above, but not at a pace that would provide much upward impetus to inflation. Moreover, weaker global growth may continue to hold inflation around the world. We are firmly committed to our symmetric 2% inflation objective. We are well aware that inflation weakness that persists even in a healthy economy could precipitate a difficult to arrest downward drift in longer-run inflation expectations. Because there are definitive measures of inflation expectations, we must rely on imperfect proxies. Market-based measures of inflation compensation have moved down since our May meeting, and some survey-based expectations measures are near the bottom of their historic ranges. Combining these factors with the risks to growth already noted, participants expressed concerns about a more sustained shortfall of inflation. Overall, our policy discussion focused on the appropriate response to the uncertain environment. The projections of appropriate policy show that many participants believe that some cut in the federal funds rate will be appropriate in a scenario that they see as most likely. Though some participants wrote down policy cuts and did not, our deliberations made clear a number of those who wrote down a flat rate path would be a pace where additional accommodation has strengthened since our May meeting. This added accommodation would support economic activity and inflation's return to our objective.
Cover more dollar yen here.
Uncertainties surrounding the baseline outlook have clearly risen since our last meeting. It's important, however, that monetary policy not overreact to any individual data point or short-term swing in sentiment. Doing so would risk adding even more uncertainty to the outlook. Thus, my colleagues and I will be looking to see whether these uncertainties will continue to weigh on the outlook, and we will use our tools as appropriate to sustain the
Probably buy gold back towards 53, 54. 53 looks pretty good. Yen is ripping. Rippage. I'm going to take some yen off. What else? These fives are kind of stinging me right now. What I need to do is we need to dip in tens. A little pullback would be nice. And add more. Ooh. Adult Swim. Guys, I'm going to step off for 2 seconds. Be right back. Oh, there comes gold back. I'm going to bid 50. I'm just eyeing the support we held before right here in front of the band. Buy one back. Euro's kind of flopping around. I'll be right back. Alright, I'm back. You guys in here doing in here? Covered some euro. I don't know if you saw that. Something's moving here. What is this? Oh. Is that all the dip we're gonna get in tens right there? 3 ticks. Not that big of a move in equities. This covers in the euro. I'll reshort above 25. Might as well offer there. It covers in dollar yen. That might be all she wrote. Cable could care less. Oh, seems like it's busy, but not really. Pretty flat on the day. The 24 and 10. What's the prior high here in tens? It's 29. Oh, got close. I might get flat futures and just stay along these calls if we get back to those highs up there. See if we can break out 24 plus. I might sell right here. 24 is pretty good. Let's see if we can get through the high or not. Nice buys at 8 plus. Now we're selling 24s. That's how we do. I still have some calls we bought right here. This yellow arrow. You sold 12.5 Rio. 12.5. Oh, 15 pips. What are you selling the cash market? Right in the middle now. 12.5 to 12.30. Nice. Same range we're playing. Yep. Good job, man. Euro's moving around more than, I guess dollar yen's had a good move. That's right on the lows. Big picture. That's going to matter tonight into, don't forget you have Bank of Japan tonight. I wouldn't be surprised if they try to throw everything they can at getting this yen back down. I mean, the yen's probably been one of the strongest assets on the planet as far as currencies. It probably is the strongest, actually. I'm going to step, I should have moved this just in front of 5 level. I should have done that earlier. Euro yen's pretty sideways. Alright, I got lifted again on Euro futures. Good covers down at 7 there. Gosh, could have sold some dollar yen on that bounce. The cable's firming up. I think you sell Euro. Look at the cash market. Euro versus dollar and spot price in the south, yeah. Equities have gone nowhere. Oh, it's coming back up. Might trade that again too. It trades like Euro. Punch out of one. Oh. Every time I do that, it trades off. Alright, got lifted out of gold again. A couple points. Ends are firm. Should have bought that little 1 minute dip. Treasuries might make a new high. Why not? New high 5s. $31s. I don't think I should sell any more 5s. Tempted to. Maybe get some 10s on. And the front end and the belly won't back off. It's just capital's just going to plow into that the rest of the day. I'm going to move this bid up in 5s, get a couple of those back. I'm going to buy a dip in 10s. Watch this level in the 10-year note, 29. I just try to sell 28s. Well, internet. Tyler, I would say TLT is the closest. It's 20-year technically. Wow, look at these 5s. Fives and 2s, baby. What's Euro-pound doing here? Still on the lows, cable. Might sell a little bit more euro. What's euro-yen doing? And then most of the flow is into gold and treasuries. And oil's catching a bit back. One hell of a chart in fives. What's AGG? You got some inverse stuff too, like TMV, I think might be one. I've never heard of AGG. TMV is the inverse. Trades a little bit more like 30 years. But that's one you could be shorting. You go with the decay and everything else that comes with that. Cut in half already. Wow. I'm just watching these 10s back at these old highs. Yeah, some iShares product they put together in aggregate. That's cool. Cover a little bit of euro if you guys want. Should have sold more there. So on the euro, you have a 1 minute cycle, it's down. That would be the first place to cover. Or we can see if this 5 minute. 5 minutes up. I'm going to bid down here at around 10 again. 10s failed at 29 plus. Fives won't come off. See if I can get two back. There we go. Covered euros again. Just little scalps. One minute cycle's down on fives. This 5 minute cycle will come off. Tyler, yeah, I came out of some 10s, yeah. Out on the long side for sure. I came out of all my futures. Just have some calls. Yep. Sold 28s. Can you see that, or are you on the road? Oh, it's sold 24s. I thought it sold 28s. Might have sold 28s in another account. You might get a little cycle the other way now. I'm gonna buy one. I just bought a 10-year to scalp. See if I'm gonna miss covering these fives. Might be able to buy gold again. Not quite deep enough. Euro, 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 can't you see? Sometimes your words just hypnotize me. Euro, euro, euro. It's choppy, huh? Tight, choppy, little near-term range. Now the market's losing its energy. There's a lot of trading, not a lot of results, just little scalps. Well, guys, I'm gonna really watch 10s tonight. Don't forget Bank of Japan, so they can move the bond market for sure. But pretty bullish here. I mean, you have yesterday's highs as resistance in 10s, but it could easily get taken out. So I'm just going to look to buy the dip, 10-year, 30s. I like to get a couple fives back as I get long more 10s. I'm like down a grand in fives and up a grand in 10s, so that's kind of a wash today. Up on gold, up on euro. Kind of sucking wind on the VIX, down a grand. I think the machines like this 15 level. If you're above it, it's risk off. If you're below 15 on the VIX, I think the machines are more willing to buy the dip. Probably could have bought S&Ps back here at 24. Held pie on the 1 minute. That was probably the right thing to do. There's 5-6 points in there. I'd buy a dip in S&Ps also against this VIX long. You guys got anything else? I can update you on the alerts. I think most of the fireworks are over. BTC care about this? No. All right, guys. Have a good rest of your day. I'll see some of you in the morning. I'll update you on the alerts. All right, Rio. Nice trading on Euro, man. All right. See you guys. See you, Chris. Bitcoin could care less, huh? All right, Tyler. See you, man.